Good evening. This is India Markets Brief from Toro IQ. Your read on today's session. India fell today, but it fell less than anyone else in Asia. And that gap is the whole story. Over the weekend, Iran fired a missile barrage at northern Israel, its first since the April ceasefire. That news pushed crude oil back up and turned the mood across Asia sour. Indian shares dropped with the region. But where the rest of Asia was hammered, India only bent. Here's where the market closed today. The Nifty 50 fished at 23,123, down 1%. It was a broad, orderly retreat, with almost every sector red. The defensives held best. Pharma fell less than 0.5%, and the banks gave up under 1%. The damage sat in the high beta corners. Realty was the worst, down 2.5%, with metals and autos close behind, hit by the global cyclical washout and by crude cost fears. The fear gauge, India VIX, jumped almost 8% to 17. That is a real repricing of risk, moving with the market rather than ahead of it, which is the mark of a controlled sell-off, not a panic. Now put India against its neighbors, because that is the point. Korea fell more than 8% today. Japan fell almost 4%, Taiwan 3.5%. India lost just over 1%. The selling was concentrated in North Asia's chip and artificial intelligence stocks, a trade India barely owns. So when that trade unwound, India sat outside the blast radius. The reason for India's smaller fall was India-specific, not global flow. Now the two things hang over the market. On the worrying side, the crude re-spike pushes on two of the three risks the Reserve Bank named on Friday: energy prices and the monsoon. Brent near $95 lifts India's import bill and feeds fuel inflation. And the Weather Office has now confirmed a below-normal monsoon at about 90% of the long-period average, with El Nino expected to develop. That is exactly the food and energy inflation tail the bank flagged. On the steadier side, the rupee held flat at 95.71, even against the crude spike and the risk-off. A quiet show of resilience. Now the movers. The cleanest winner was CCL Products, up almost 9%. The company makes instant coffee. It posted a strong fourth quarter, with revenue up 46% and 18% volume growth. And the market paid up for proven results on a weekday. The biggest faller was Wipro, down more than 8%, but read it carefully. Most of that drop is mechanical. Today was the record date for its 15,000 crore rupee share buyback, which knocks the price down by design. This is not a fundamental collapse. The reversal worth naming was MTAR Technologies, down more than 6%. It fell despite a strong quarter, with profit up 223%. That was pure profit taking after the stock had nearly doubled in 3 months. Now, what to watch? And it is tomorrow's question. The first thing is whether Iran's statement that its operations are over actually holds. Iran tied that to Israel halting its own action, so any fresh escalation could re-spike crude. Brent is the live signal. One timing note. After India closed today, United States markets bounced, with the Nasdaq up more than 1%. That bounce is a Tuesday input. It points to a steadier Indian Open, but it did not lift today's close. That's your brief. Before I sign off, this has been general market commentary, not investment advice. For investment advice tailored to your situation, consult a SEBI-registered investment advisor. Markets are risky. You may lose money. Act with care. See you tomorrow.